So today we had a ton of great news in regards to Tesla stock, but before we go ahead and share some of the good news, I want to highlight some key topics that have been influencing not only Tesla, but the overall markets. For example, yesterday I highlighted the economic calendar and things that are taking place for today, and of course one of the main things was the initial jobless claims, which we're going to go ahead and touch on later on, but we also had a couple of Fed speakers speaking today, with one of them being Mary Daly. And so today we heard Federal Reserve Bank of San Francisco President Mary Daly say that policymakers can hold interest rates steady if the labor market and inflation continues to cool or financial conditions remain tight. Now, in quote, she said, if we continue to see a cooling labor market and inflation heading back to our target, we can hold interest rates steady and let the effects of monetary policy continue to work. She goes on to say, importantly, even if we hold rates where they are today, policy will grow increasingly restrictive as inflation and inflation expectations fall. So holding rates steady is an active policy action. Likewise, if financial conditions, which have tightened considerably in the past 90 days, remain tight, the need for us to take further action is diminished. Now, I know some of you guys may say, but Justin, isn't this exactly what you've been saying for a while now, that it's most likely that the Federal Reserve is not going to hike anymore, and the real question is about how long are they going to hold rates? And that's entirely true. Yes, I have been saying this, but it's important that we hear these words come out of the mouth from Mary Daly, most importantly because of the fact that when we take a look at her stance on monetary policy, we see that Mary Daly typically has been holding on to more of a hawkish stance when we look at the scale of, all the central bankers and where they stand. We always have heard Goolsbee be a major dove right over here, but Mary Daly has been more on the side of being a hawk, especially the biggest hawk is Kashari. Kashari is the central banker who's going to tell you that we need to just continue hiking, and he'll say the worst things which tend to have a negative impact or sentiment in the markets, but hearing Mary Daly say this was actually quite positive. Now, in yesterday's video, we covered how Tesla had a tremendously great day, but what was interesting to find was that we saw that Cathie Wood ended up selling a tremendous amount of Tesla shares yesterday. In fact, if you do the math, it totals up to be around $25 million worth of Tesla that she sold off when Tesla was rallying up yesterday. And so it's kind of like when Tesla was running up, Cathie Wood used that as an opportunity to go ahead and trim off some positions on Tesla. Now, I know this may seem confusing to many individuals who follow Cathie Wood because we often hear her being a huge bull for Tesla, but as I often say, you can't just follow these fund managers blindly simply because they play by a different game. We know that these fund managers have to have a certain amount of allocation to certain stocks in their portfolio, and they can't have a certain position exceed a certain threshold. And so this is why we're seeing Cathie Wood trim off more shares of Tesla. In fact, I spoke about this in a previous video, and I wouldn't be surprised if we see Tesla rally up in the near future and see her trim off more of her position for Tesla, despite her being very bullish for Tesla. And this is again because we see that Tesla in her portfolio, or her flagship ETF ARK, has a rating at around 11.30%. And so generally speaking, we see that fund managers like to keep positions under 10%. So most likely when we see another rally for Tesla, she's gonna most likely trim off some more shares. Now, looking into some good news today, we see that Hyundai, and I believe Kia as well, is going to be added to the North American charging standard, where now they're going to have access to 12,000 plus Tesla superchargers in North America. So I believe that not only in the next upcoming earnings report that we're going to see, but also in future earnings reports as well, we're also going to start to see that Tesla is going to be ramping up in its revenues for things such as energy. Now, this is really important because I know that, but it's most likely that going into the next earnings report that we're going to be getting in a couple of weeks, that we're most likely going to see sales down, which is something that Elon Musk actually told us or forewarned us about in the previous earnings call. But I think we're going to be pretty impressed with what we're seeing Tesla do from the energy side of things going into the future earnings reports, as we're seeing this massive adoption from pretty much almost every other automaker. In addition to that, we also got good news today that Tesla has asked for infrastructure to be built in the northern Mexican state where the car maker plans to construct a new automotive plant. And so we definitely got some good news for Tesla today. However, I want to just go real quick back to some of the macroeconomic data that we got for today, such as the initial jobless claims. For example, when we parse through the initial jobless claims report that came out today at 8:30, we see that the jobless claims inched up to 207,000, but no signs of rising US layoffs. And this is why we saw a bit of a sell-off in the opening of today's trading session, because as I told members of the Push and Profit private group, and I believe I said it a couple of times publicly on this YouTube channel, the labor market is going to be a huge influence on what happens with the stock market, because we know that multiple members of the Federal Reserve are paying attention to the labor market and they want to see the labor market cool off. This way they could, at least have a little bit of an upper hand in their battle against inflation, which has been a little bit more difficult than they imagined. And so this is why seeing this report come up, or not really come up too high, was kind of a bit of a downer for the markets, because again, we don't want to see Americans all of a sudden all start applying for unemployment. That's not good for, just the growth of the economy. But we have to have this equilibrium of unemployment rising a bit. This way we, get to have some restoration of price stability. And so this is what has been causing the markets to sell off in the early trading sessions. But with that said, I want us to go ahead and hop into my laptop. This way we could take a deeper look into Tesla stock and really look at it from a technical perspective and really break down some of the price action that we're seeing with Tesla stock, as well as cover some additional topics going on with the overall markets that I think are really important to be mindful of. But before we do so, before we even hop into my laptop, make sure to take a look into the comment section below in this video, because there's going to be a pinned comment for my free weekly market pulse insights, which again is completely free, where every single Sunday I send out a weekly email talking about things that we have to absolutely be mindful of going on in the overall markets. And many individuals who have already signed up love it. It's absolutely great. So regardless if you're trading or investing and you want to get updates on the overall market, again, check out that pinned comment in the comment section below. And with that said, let's go ahead and hop into my laptop. Alrighty, so we're taking a look at Tesla stock, and we do have just a couple of minutes before today's closing bell rings for the market, and we see that Tesla stock is actually relatively flat in comparison to yesterday. We saw that yesterday we rallied up all the way to around, it looks like $261 and some change, and right now it looks like we're closing just a couple of dollars below yesterday's close, so relatively a flat day. And this is simply because we started off the day in the pre-markets coming down, we moved up, sold off, and then towards the middle of the day we started pushing upwards, and then again got rejected, and now we're kind of closing a little bit softer towards the end of the day. Now I want us to pay attention first off to this area over here. As I often say, it's important to pay attention to macroeconomic data. What happened at 8:30? Well, that's when we got the disappointing labor news with the initial jobless claims. In fact, let's look at this from a 1 minute time frame. Sometimes it's just easier to look at it like this. We see that exactly at 8:30 when the report came out, we saw Tesla fall down, and it wasn't just Tesla and Silo. In fact, if we take a look at the overall S&P 500, same thing. 8:30, the report came out. It was a disappointing report because we know that we want to see a little bit more of the labor market cooling off, and that's why we saw some selling pressure in today's trading session. Although there were some great opportunities catching the dip. For example, for those of you guys that don't know, yes, I do invest in Tesla in the long term, but I also have a short-term trading account where I trade, Tesla amongst several other stocks in the short term to capture up, the fluctuation in price. And one of the trade ideas that we caught within the Push and Profit private group was Amazon, where before the market opened, I talked about looking into Amazon when it was around that early $124 range. And then we pretty much got it perfectly, where it was, there were some adjustments. I should probably pull up the message from Discord, but just to keep this video going and flowing much more smoothly, I'm just going to leave it as is. But we did catch a great opportunity for Amazon, where if you guys want to be able to be part of my daily briefings where I talk about trade ideas as well as what's going on in the overall markets, that is the first link in the description of this video, and that link is not free. But again, if you just want to have access to my weekly market pulse insights, that is free, and that's going to be in the pinned comment in the comment section below. But back onto Tesla, right? So I'm sure you guys still see this huge rectangle over here, and that's actually something I put yesterday. Let's actually go to a 4-hour chart. So yesterday I actually identified this and labeled this as a supply zone, where we see that in the past Tesla has gotten rejected over here, and it's also been in the past as well a area of support, and old support becomes resistance, which is why I labeled this as an area of basically supply. Now it doesn't mean that Tesla can't break above this. In fact, I think we're getting close to possibly breaking above this in the next couple of days. What it is just to measure where we're currently at, right? That's the whole idea of technical analysis. Too many individuals get it wrong where they think it's to predict the movements of the market. No, there's no crystal ball, and we just look at several different data points to see what's currently going on, and we take action based on that data. And so if we actually, just look into a 5-minute view, Tesla rejected almost perfectly by that supply zone that I put yesterday, and then pretty much it did exceed it a bit today, and that's when the selling took place. And if we actually move towards the end of the day, again, we started selling around the same area. And again, you could watch yesterday's video, not telling you have to, but if you watch yesterday's video, I say the same reasoning as why I put this as a supply level of supply, and it looks like it's holding still. So we're gonna want to watch to see if Tesla can break above it, because that would be good. If we could break above this level of supply, well, then guess what? This could turn into a level of demand. Now, let's go ahead and take a look at Tesla from a daily time frame, and let's actually kind of hide this. I hate having too much on the charts. I'm not one of those individuals where you see they have several different levels. I mean, you see that all over X.com, formerly known as Twitter, or even on YouTube. Individuals just have levels and levels, and the thing with technical analysis is, yeah, I use it as a data point, but I don't solely rely on it. Some people just only use it, and they can't tell you why the market fell. A lot of these technical traders, you'll see the market fall down, and you ask them, why did the market fall down? And they'll be like, oh, well, it broke a level. They have no other understanding of what's going on in the markets, which is why I'm not trying to really put down technical analysis, but you should use it in confluence with other data points. Now, what other data do we want to pay attention to for this week, or ending this week, right? Well, let's actually get away from this real quick. We'll talk about that later. It's actually Friday. So tomorrow we're going to have a bunch of labor data, and we've seen in the past, labor data has been steering the markets. We had the private sector ADP number. Well, actually, before that, we had the job openings come out. That had a huge influence on Tuesday. Yesterday, we had the ADP employment reports. That had a huge influence on the markets. I mean, you could just go back and watch my previous videos, and you could see me identify that when these reports come out, it has a huge influence on the markets, including Tesla. If you think Tesla is something that's moving in a different direction from the overall market and this economic data, you're wrong. I pointed out in almost all my videos, we see it moving at when these reports come out. Today we had the initial jobless claims, but more importantly, the big labor data is going to be unemployment. That's going to be the huge thing for tomorrow. Now, if we get unemployment slightly rising up, and again, it's not that we want to see the economy go into a recession, because the only thing holding us away from a recession is the idea that many Americans have jobs, right? But we want to see it cool off. The problem is we're at an area right now where there's a lot of demand for labor. It's honestly just crazy how much demand there is for labor, and it's partly because of things that happened in the pandemic. I mean, it was hard to get employees during the pandemic, and so we're seeing a lot of companies retain their employees. We're not seeing them cut off as we have seen in the past, and so that's a interesting dynamic. I'm not sure if anyone remembers maybe 2020, 2021, you'd go to almost any type of business or establishment, and it was so short-staffed, and it was so slow, the lines were long. I mean, when I was working at the bank at that time, individuals were complaining all the time, like, hey, there's no other bankers here, like, what's going on? And it was just honestly so short-staffed. And so it looks like a lot of these companies are holding off into their workers and holding on to labor. And we're going to see if there's an update on that tomorrow, or what the update on that is tomorrow with U.S. hourly wages, because it looks like hourly wages have been holding steady but slightly declining. So it looks like a lot of these companies, what they're doing is they're holding their workers and maybe just giving them some slightly less hours, but still keeping them. And so if we don't see unemployment tick up just a bit, that could spill some red for the market. So I want us to be aware of that, okay? This is going to be the huge driver for tomorrow's trading session. Now, going into what you guys saw just a couple of minutes ago, this is a chart over here, which is the futures market pricing in what the Feds are going to do for November 1st, right? And so we see that now it's only a 19% chance that the markets are pricing in that the Feds are going to hike. And I believe this is going to continue going down lower, especially if we have continuous talks from Fed members about, pausing and not really needing the hike. But it's going to be important to watch this tomorrow because it's going to be interesting. If we see unemployment actually tick downwards or remain flat, well, we could see the market get a little bit worried or scared that, hey, maybe the Feds may actually have to hike. I still don't think that they will, but of course, we're going to want to look out for the data. With that said, let's look at Tesla from a daily time frame. So we're at a interesting area, a pivotal moment. And one of the things we want to see is, okay, well, Tesla's rising up. Is it going to get rejected right over here with the supply zone? And if it does break above it, well, the next threshold is this area right over here where we see that Tesla has gotten rejected a multitude of different times in the past. So definitely an interesting area for Tesla. We've seen in the past Tesla kind of rally up close to its earnings and then get rejected hard at their bad earnings. And we have the fundamental data coming out in just a couple of weeks where we're going to get an update on the earnings. So definitely an interesting time for Tesla, but I don't necessarily think we're going to break into new highs. Although we have some good news coming out, I'm not going to be one of those guys that you often see saying, oh, Tesla is going to go to the moon and it's going to break into new highs. No, right? Yeah, I'm bullish on Tesla in the long term, but I'm also a realistic individual and I'm patient as well. I don't expect Tesla to go into the, these next levels just right away, especially in the current environment that we're in. I think too many individuals are trying to get rich quick, and that's not the way you approach the markets, especially if you're investing, okay? So what I'm going to be doing for my long-term portfolio is if Tesla falls down, and I'm going to do the same thing I did last time. When it sells off and I see confirmation of an uptrend, we'll buy more. I know several individuals are waiting, honestly, for Tesla to fall down. Some investors are salivating. I know some of my favorite viewers who comment on this channel are looking for Tesla to hit the 180 levels just so that they could pull the trigger and buy some more. And so it's not necessarily a bad thing. It's just an opportunity to scoop up more shares of Tesla if we end up continuously falling down. And so I am bullish on Tesla in the long term with the idea that you see these legacy automakers trying to transition to the EV space. They're not doing a good job. Even some of these EV companies are not doing great. And Tesla's just positioned in a best case scenario. It's just positioned so much better than a lot of these other companies. But with that said, I'm going to leave this video over here. Let me know what your thoughts are in the comment section below. And before you go, make sure to watch this next video right over here where I break down volume profile, which is the stuff right over here on the right that you often hear me talk about. I didn't talk about it in this video, but I probably am going to mention it in the next coming videos as we are entering into an interesting area. With that said, take care.